Hello and welcome to my Trading 212 Stocks and Shares ISA portfolio update for January 2025. As you may recall, I made some pretty big changes to the portfolio and sold most of my individual stocks in the ISA, and so I did enter 2025 with a much simpler portfolio. We'll get to looking at my positions shortly, and I'm in a new format this month, so let me know your thoughts. But firstly, let's see how the markets have been doing, as it has been interesting to say the least. It's been a great start to 2025 for the UK markets, with the FTSE 100 reaching new highs thanks to banking, mining and oil sectors driving returns. Over in the US, the S&P 500 had started off 2025 continuing its great run, with a 5-year chart showing that it has been pushing new highs all the time recently. However, the joyride did come to a bit of a bump in the road on 27th of January with the news that the DeepSeek AI, Chinese rival to ChatGPT, was developed at a fraction of the cost, apparently only $6 million, therefore raising questions about the future of America's AI dominance and whether firms will need to continue making the same large scale of investment into AI chips. This in turn led to a very red day for semiconductor stocks, with Nvidia losing nearly $600 billion in market value in a single day. The dip was concentrated on the tech and semiconductor industries, however, with the wider S&P 500 not really being impacted. In fact, despite the sizable dip in Nvidia, the S&P 500 itself was down by less than 2% on the day in the end. Looking at an S&P 500 map for the 27th of January really highlights that the news really only impacted semiconductors and tech, with pretty much every other sector being in the green on the day and having some decent gains. So really, for me, this dip didn't really turn out to be as catastrophic as it first seemed when I woke up in the morning, as a close look does reveal it was very limited in scope. Of course, if you're a semiconductor holder, you may have different thoughts, but let's see how things pan out. Recording this a couple days later, things have already started recovering, as we can see on a year-to-date chart for the S&P 500, but who knows what will happen next. Now, before jumping into the update, as Trading 212 are kindly sponsoring today's video, you can still claim free fractional shares worth up to £100 by signing up to Trading 212 via my link in the description. For those watching on TV, you can simply scan the QR code on screen with your phone. And if you have recently opened a Trading 212 account and have not got a free fractional share, you can use my promo code TOM within 10 days of opening your account. The promo code section of the app can be found in the menu page, the three lines at the bottom right, and then tapping on Use Promo Code. Trading 212 is the low-cost investment platform that I've been a happy customer for around 2 years now. They offer zero commission on trades, zero custody fee, and a foreign exchange fee of 0.15%, which is one of the lowest available among UK investment platforms. With over 13,000 global stocks and ETFs to invest in, and both a cash ISA and a stocks and shares ISA offered, Trading 212 really is a great platform to help you build wealth. So here we are on the portfolio update. We're trying something new this month, new format, camera on. Let me know in the comments below what you think of it, but it's unscripted, my first time doing this, so forgive me if it's a bit wobbly, but we'll see how it goes. Okay, so looking at the total return now on the maximum chart, it's £2,143.89, rate of return 17.6%. But if we just switch to that 1 month view, we can see that dip there that was on the 27th of January and how already it's pretty much recovered to where it was before. And that dip really has turned out in my portfolio to be nothing to worry about at all. In fact, we can actually see over the last month, the rate of return is 3.7%. So it has been an incredibly good month for the markets. That dip has turned out to be a very minor blip, but who knows what will happen going forward. And speaking of the total return and rate of return, this is obviously something new with Trading 212. Now, a lot of people aren't a fan of this, but those who are regular viewers of my channel, my updates, will know that I've been manually working out my total return up till now and using the XIRR function on Excel to work out my rate of return. So this is a very welcome change for me. And if we can click on it here, we can see the total return is the total profit or loss from your activity, including investment performance, dividends, interest, FX fee, government taxes, and more. So total return, including all sources of return. For me, as a long-term investor, this is what I want to see on my homepage return chart. And especially the fact that it takes away stuff like FX fees, government taxes like stamp duty, it really means it is an accurate total return figure. Now, the rate of return, this is what's confusing some people, is because it uses the money-weighted rate of return. So what that means is it's adjusted for the size and timing of individual investments or withdrawals. And you can see here, older and larger investments have a greater impact on your rate of return than recent or smaller ones. Now, the money weighted rate of return can be a bit difficult to get your head around at first, but once you've got your head around it, it's a much better way of measuring your portfolio performance. I will leave a link to a video by the Playing Footsie podcast in the description because they give you a good run through of how it exactly works. And I would check that out because it is the better way of calculating a private investor performance, in my opinion. It's just because it's changed and people aren't used to it, it has confused some people. But I'm happy to see it. And obviously, net deposits is the difference between the cash you've deposited and withdrawn from your account. So there's my total return, 2,139, rate of return 17.6%. And I'll put my XIRR calculation on screen now as well. And the reason why that's different is my understanding is the XIRR on Excel gives you an annualized internal rate of return, whereas this rate of return here is not annualized on the Trading 212 app. And because this portfolio is less than a year old, obviously the annualized rate of return will be higher because it's taking into account the fact that it is less than a year old. Okay, the next thing I want to show on the new UI for Trading 212 is if we scroll down, we can see the ISA allowance here. So it says that I've used 13,500 and remaining 6,500. Now, what you've got to remember is Trading 212 doesn't know about my contributions to other ISAs. So I've contributed £4,000 to a lifetime ISA, and I've also contributed to a stocks and shares ISA on Invest Engine. So actually, I can't deposit any more to my Trading 212 ISA, despite the fact that it says I have allowance remaining. So you've got to keep in mind your other contributions, and it's up to you to keep on track of this. The other thing to keep in mind here is that click on the reorder screen button at the bottom and you can change the order of the things here, because before this ISA allowance wasn't on this page. So if you don't like having it at the top, I've moved it to the bottom, which I much prefer. Okay, we'll now go through the positions. First up, JP Morgan Global Growth and Income. I haven't added to this position this month other than reinvesting dividends, which I'll show shortly. But if we look at the 1 month chart, we can see that the last month has been incredible, up 3.47%, and that's obviously not including the dividend either, so it's been a very good month for JGGI. You can see that dip on the 27th of January, but just like my portfolio more generally, it's not lasted long at all, and it's pretty much back to it's nearly back to all-time highs again. 2013.99 shares, so annoying, we do have that annoying fractional share. I have been trying to keep those numbers nice and round, but in this case, when I reinvested the dividends, it did take me over like that. So the return is 7.58%. Remember, that doesn't include dividends, that's just share price return, and this isn't money weighted. So the individual stock aren't money weighted yet, that's just your simple return. So if we scroll down to the history now, here we can see the dividends. So on the 6th of January, I received a dividend of £78.66. Now, not all the shares that I hold in JGGI were eligible for the dividend, so my next quarterly dividend will be even greater because I've got 2,000 plus shares eligible for the dividend. And you can see here, across a few payments, I did reinvest those dividends back into JGGI pretty much straight away. So that's that. And then if we go back and we got the next position is SPDR MSCI USA Small Cap Value Weighted. This has a ticker USSC. On a similar case, over the last month, it's up by 3.93%. Scroll down, 40 shares and return 12.56%. FX impact is positive. I haven't added any further to this position, I don't think. Let me just double check. No, last top up was December, so I haven't added anything further to this ETF. And as I'll show at the end of this video, I may switch this out because there is another small cap ETF that has launched recently and added to Trading 212, which I do kind of like look at and may prefer to this. Either I'll sell this and move to that one, or I'll create a new position in the new tax year of that new ETF. I haven't decided yet. And then lastly, the remaining individual stock in the portfolio, Bloomsbury Publishing. This has a return at the moment of 15%. It is actually down by 3.59% over the last month, so it's not been too great. But you can see it was much worse than that, down to 600p at one point, but it has recovered back up to around 650p. Now, there was a brief scare, I think last week, about Amazon cutting their deal with Bloomsbury. That was on the evening. But then the morning after, there was an article on the Bloomsbury website directly that said they had reached a deal with Amazon. So that scare story turned out to be nothing. But I would have been interested to see how much the share price dropped if they actually didn't reach that deal with Amazon, because I imagine a lot of their book sales do come through Amazon. I think a lot of sales of anything come through Amazon nowadays. So that's the portfolio. Scrolling back up, I'm really happy with how this is doing. With my net deposits of 13,500, it's a shame I don't have any ISA allowance remaining because I would have loved to buy the dip. I have bought the dip in my investor account, which I'll briefly show at the end, but in my stocks ISA, unfortunately, I wasn't able to buy the dip because it is maxed out in terms of my allowance. But yeah, I'm really happy with that. And lastly, just to quickly look at the asset allocation, we can see that my portfolio is about 80% JP Morgan Global Growth and Income as intended, 14% SPDR MSCI USA Small Cap Value Weighted, and 7% Bloomsbury Publishing individual stock. So that was the run through of the portfolio. Let me know your thoughts on this new layout with the camera on screen and the phone on and scriptless. It's my first time doing it without a script this update, so if I did stumble over my words,
Apologies, but I'll hopefully get used to it. But let me know your thoughts on it in the comments below.
Now, one observation to be made here is that whilst I do have the majority of my portfolio in diversified vehicles, JGGI is an actively managed investment trust and thus does come with the risks of active management generally. Just because they've beaten the market historically does not mean they'll go on to. The reason why I've been happy to have such a large weighting to JGGI, however, is that I do, of course, have my Invest Engine portfolio where I hold passive index tracking ETFs, so that does counteract this weighting in part. That being said, I would also like to add a passive ETF to my trading 212 portfolio in the new tax year when my ISA allowance resets. I'm unsure what exactly I'll go for, but it'll probably be some form of developed markets or all-world ETF. I'm leaning towards ACWI as it is now the cheapest global fund that trades in GBP with a total expense ratio of just 0.12%. As alluded to when looking at USSC, the other change I'm considering is swapping that out or holding another small cap value fund alongside it, and that is the Avantis Global Small Cap Value ETF, ticker AVSG. That was launched very recently and added to Trading 212 in the last couple of weeks. As it is brand new, we cannot see how the ETF has performed, but American Century are well-respected providers of small-cap value funds over in the US, so I was happy to see them enter the European market. Not to mention, the launch of AVSG means we finally have a small-cap value fund that is listed in GBP, so that is one selling point for me over USSC that trades in USD and thus incurs an FX fee on transactions. The last thing to mention is that I am using my Trading 212 Invest account for a bit of stock picking, and I will show it periodically. For example, this month I started investing in some European companies. For example, I picked up some ASML shares on the dip on 27th of January, and that's so far going pretty well. As I do share the vast majority of my finances here on YouTube, it is nice to have a small portfolio to myself off YouTube. It will be relatively small amounts of money used to make sure I stay within capital gains and dividend allowances, as Invest is not a tax advantaged account. That is it for this update. Despite the bump in the road, I do think overall it has been a great start to 2025, and I'm excited to see what the next month has in store. Now, don't forget the offer from Trading 212. You can get free fractional shares worth up to £100 by signing up through the link in the description, or using the promo code TOM within 10 days of opening your account. As always, thank you for watching.